Well, well, well. If it isn't Friday. To which I know so many say, thank God it's Friday, or thank goodness it's Friday, TGIF, right? Well, what's that old expression? If you love what you do, it's not work. There may be some truth to that. You can still work even if you love what you do. It can still be work, right? You might love being a firefighter. Don't let anybody tell you it's not work. You might love being an EMT or a carpenter or a mechanic or anything, a farmer, an office clerk. It's still work. Hello, cat. Oh, yes. Hey, buddy. Say hello to my animal friends. Um, there is some truth to the notion. I can certainly say, as a person who figured out ways to, quote unquote, um, I guess you could say, semi-retire from a very early age, having figured out ways to generate revenue online decades and decades ago, way back in the old 1980s, and then ever more so by the late 1990s when the web became a thing, a household kind of cultural phenomenon, right? And since then you could say, oh, really, been semi-retired. Okay, arguably. And there are always, of course, periods of, what's the phrase? Reaping and sowing, right? Or hills and valleys, or feasts and famines. Depends on the season or the year or the decade. Some decades are better than others. How loud can you? Well, that's a highly appropriate question to ask. Are you a bot? I think you're a bot. Anyway, so why do I mention any of that? Well, because if you're a Bitcoin trader or any kind of trader, and if you're doing it well, then you can absolutely love what you do, but that doesn't mean it's not work. You have to treat it like a job. If you don't treat it like a job, you're sure to get wrecked. Okay. And by treating it like a job, I mean you need to show up day in, day out, typically 5 days a week, maybe 4 because you got flex time and you put in the extra hours on the 4 days you're there. But if you're a serious trader, I don't mean just a hobby trader for fun and you trade anywhere from 1 to 3 days a week, you put in a couple trades and that's it. No, I'm talking if you're a serious trader, professional, or you treat it like a profession, even if you're a retail trader and you don't work for a big firm and you don't manage someone else's money, you manage your own funds, well, then you need to treat it like a real job. And that means you just show up for work, for trading every day that the market lets you and that you have time, and 3 to 5 days a week minimum. And you need to work. And yeah, is it important to have time off too during the year? Sure. But more importantly, it's important to be there most of the days of the year and trade most of the days of the year. And that doesn't mean you have to only trade one asset or a small, a tiny group of 5 assets. No. If you're a real trader, you look for opportunities wherever there are opportunities. It doesn't matter what the asset is. Yeah, you might love trading Bitcoin or Fartcoin or Litecoin or Solana or whatever. That doesn't mean you can't trade gold. Doesn't mean you can't trade SPY. Doesn't mean you can't trade Tesla. Doesn't mean you can't trade Apple. Right? You can use different sites, different accounts to trade these things. And I know you'll tell me, well, but I don't live in the U.S. I don't have access to a U.S. brokerage. How can I do that? You know, there's CFDs, right? Contracts for difference. You know what those are, right? Those are basically derivatives of real assets. They're synthetic versions of those assets. So you can trade Tesla or Apple or whatever as a CFD on any number of sites. I'm not going to name them here because I'm not giving them free advertising, and it's up to you to figure out which ones are relevant to you, because we're they're different in every country. There's different ones practically in every country, right? Maybe not every single country, but there's different ones in lots of different countries, and there's a lot of them to choose from. If you're in Europe or the Middle East or Africa or Asia, South America, wherever you are outside of the United States, if you're trying to trade U.S. traditional markets, that's usually the easiest way to do it, right? Now, you don't have to use CFDs. You can also trade your local assets in your markets where you are locally. It doesn't matter, right? I'm sure if there's a stock market where you live, look at the assets on your local market. Look at a local brokerage if you want to go through that to get the actual underlying assets. Trade that. Now, why do I mention all of this just to run around to tell you about what Bitcoin did and is about to do? Very simply put, yesterday, as I've been telling you all week, yes, Bitcoin is in mean reversion on the daily time frame to the 3012 RMLR. But that doesn't mean you can't have down days. Right? I've been saying it repeatedly. I've been telling you to take your profits. And don't try to swing trade this thing. Just because it's in a mean reversion on a high time frame like a daily time frame doesn't mean you can't have nice short days of shorts. And lo and behold, what do you know? Since Wednesday, or Tuesday even, it's been giving you very nice shorts. Came down from 108 grand to like sub 95. Do you think that's an accident? No, it's called a distribution to the downside, and it was also mean reverting on different time frames. If you look at the 15-minute time frame, you'll notice it distributed to the downside extremely powerfully, hit the third bands down of the RMLRs, began to mean revert to the 1110 RMLR and the 3012 RMLR, but then continued to distribute, busting excuse me, busting the probabilities, right, wide open, right? It did not do what it does 99.7% of the time in that extreme example. And that's why I always point out that there's a probability that it won't mean revert after a couple of candles of not touching those bands. Most of the time it does. Yesterday was an example when it didn't. A beautiful example, a perfect example, where it went over multiple candles, completed the mean reversion to the 1110, but did not complete the mean reversion to the 3012, then dropped again real hard as it was still in mean reversion to the 3012, and hit that third band to the downside again on the third standard deviation of the 3012 RMLR on the 15-minute time frame, and it hit the same third band down to the 1110 RMLR on the 15-minute candle. That hit that third band down, right? And then it began to mean revert again, but didn't. Skipped, just one candle. So didn't actually enter the mean reversion on the second candle after the first hit there. Well, of the second time that it was hitting it, it hit the band again, and then began to proceed with the mean reversions, which took a while because it dropped further, but didn't hit that band again. And eventually mean reverted to the 1110 RMLR, and then eventually mean reverted to the 3012 RMLR. It's a perfect example of when you see the asset do an outlier move like that, that the first time it's highly probable it will do the mean reversion, but if it doesn't, then afterwards, if it hits it again in a highly improbable move, it makes it more probable that it will complete that mean reversion after the second time, which is exactly what happened. And you'll notice that when it hit that third band to the downside in the quote-unquote unexpected or improbable or less probable time, that third band down in both of those RMLRs was in fact a very good place to take your profits on the short. It just was. Right? Did it go down further? Yeah, but not before it went sideways for a while. So once again, those third bands to the upside or the downside of the RMLRs are extremely good take profit areas when the asset should normally be in mean reversion, but is instead going in that direction of those bands. It was a perfect example of that. Now, what is the asset going to do today? Well, if you look at the volatility on the daily time frame, it's Friday, the whatever it is. I think it's the 20th of December. Wow. Is it the 20th? I think so. Anyway, whatever day it is. Yeah, pretty sure it is. The asset has very mixed volatility, right? The short length, mid length, and long length all have different indications. You got an up, you got a no trade, you got a down. And the variance is also telling you, yeah, this puppy is not going to be flying off the handle right now. But of course, that information on such a high time frame can and does change. Right? So that's why you have to look at the lower time frames. But yeah, we definitely see right now mixed information for the volatility, which is very good. Why is that very good? Because it's giving you a lot of opportunities to scalp on lower time frames, right? That's what you see when you see mixed information on the volatility for the daily. And for entropy also, when you see that the asset is not 100% in one direction only, it's telling you, yeah, there are scalping opportunities here on the lower time frames. I don't know what you're talking about. I don't know who you people are, but I don't know where you came in from, but feel free to leave if you're just going to make stupid comments like that. Or feel free to learn a thing about trading. And just, enjoy. So the asset is saying right now, right? Never mind. Oh, it's Friday. It's a take profit day. Look at when options expire also, by the way. Is it the final Friday of the month? Next Friday would be the 28th. So no, it's not the final Friday of the month. Is the 28th a holiday? Not on the markets, it's not. The 27th even. 2 days after Christmas. It might be Hanukkah. It's a Hanukkah holiday. We don't close markets for that, typically. And they'll typically close for Christmas, but not for Kwanzaa or Hanukkah or anything like that. Because, yeah, why would they do that? Then they're closer to New Year's, right? So they're close for New Year's. That's the 31st. That would be, I think, the 31st is on a Tuesday or something like that, right? So yeah, next Friday the market should be open, even if people are on holiday, from school or from work. Traders won't be. Markets will be open, even though a lot of people will be holidaying already. Right? A typical trader. Your retail trader might be on holiday, or even professional traders might be on holiday, but their firms will be open and will be trading, right? And the bots don't stop, and they got human managers all around the world who do not stop trading. They don't care what day it is. They don't care if it's a holiday. So keep an eye on those things, because that's where you're likely to see some very nice action. But today, on the markets, expect to see really good volatility for low time frames, especially on Bitcoin, especially on Litecoin, especially on Solana. Also XRP. I really, really hope you guys took your profits on XRP, as I've been telling you to do for like more than 2 weeks already. Especially if you were in longs, obviously, Yeah, but I was in the short. I could stay longer in the short. Yeah, maybe you could have stayed longer in the short. It's all about the stacking and racking on intraday time frames, for the very simple reason, right, that if you are stacking and racking on intraday time frames, right, as traders do, then you are more likely at the end of the year to accumulate a bigger bag of returns, of actualized profits, not unrealized profits, right, but realized profits, which are actual profits. Keep trades open, hoping price go to moon or price go to ground or whatever, right? Price go to zero. That's not how things work, right? If you want things to go to zero, it's very easy. Pick a very, very mature asset whose time has come, okay? Just pick a very, very mature asset whose time has come. Easiest thing to do in the world. Pick a dying asset. Very probably it will go to zero. That's just how it goes. Why? When will it go to zero? When it does. Right? It could take a long, long time. But hey, if you pick a very mature asset that has passed its peak, and it's well past its prime, and it's time to go, there's really only one thing for it to do, right? Stocks have life cycles, just like currencies, just like people, just like animals, just like plants, just like houses. Things have life cycles, and so do assets that are on the market. So if you're really serious about being a bear, just go pick assets that are going to go to zero, right? What's the worst it can do? Go to zero? That's your aim, right? What's the best it can do for you if you're a bear? Go to zero? Well, that's your aim, right? Shouldn't be a problem. What was that? You want assets that are going to deliver more over time, not less. How do you get assets that are going to deliver more gains over time, not less? You pick assets that have more of a life in front of them and have more potential returns in front of them, because they are still in go mode. As long as they're in go mode, then they still have the potential to grow. All right, that's going to do it for now. You guys hear that physics, the thing with the ball? You hear that thing with the ball? I don't know if you know what that is. You have the 4 or 5 balls. You drop one, energy goes through it, makes the other one move. move back and forth, back and forth, back and forth. That is what you're hearing. Anyway, I have one set automatically, timed to an electronic device that just kickstarts it when the light switches on over there. Anyway, why? Because it's fun. So there you go. That's going to do it for now. Hope you all have a wonderful, happy trading day. Happy Friday. And I'll catch you guys later. Cheers.